Hey there, my name is Krystal, a CPA at LYFE Accounting, where we help you to save on taxes and build your wealth. Today, I want to help you do just that by going over how EV or electric vehicle tax credits work. There's been a huge increase in the popularity and use of electric vehicles over the past decade, and according to White House projections, EV car sales will account for 40 to 50% of total car sales. So there's a pretty good chance that your next car will be an electric one. And if it is, not only will there be environmental benefits, but some significant tax benefits for you as well. With that said, if you want to learn more about how purchasing an EV affects your taxes, make sure you stick around until the end for all of the details related to EV tax credits. And be sure to like and subscribe if you don't want to miss out on more ways to save and make money. All right, first, what is an EV tax credit? The Internal Revenue Code Section 30D provides a tax credit to any individual who purchased a qualifying EV during the year. The credit first came to life with the Energy Improvement and Extension Act of 2008, and amendments came with the American Recovery and Reinvestment Act of 2009, which really gave us the tax credits as we know them today. Currently, the credit provides up to $7,500 in a tax credit when you claim an EV purchase on taxes filed for the year you bought the vehicle. So if you bought an EV in 2021, you would claim the purchase when filing your 2021 taxes in 2022. Now, there are two different factors that determine your max EV tax credit, and they include, first, there is a $4,000 base EV tax credit for all electric vehicles. Second, there is an additional $3,500 added to the credit if the EV's battery pack includes at least 40 kilowatt hours of capacity. So that gives a total max credit of $7,500. But there are some limitations to consider. The first being an income limitation to claim the full credit. Right now, this is set at $400,000 for single filers and $800,000 for joint filers. If you earn over these amounts, the credit is phased out. And the second being the credit cap for automakers. Currently, EV tax credits are phased out after a particular automaker sells over 200,000 qualifying vehicles. For Tesla, being the largest EV producer in the US today, they have already reached this threshold, and new buyers of the vehicle would not qualify for the EV tax credit. But with the new possible changes to EV tax credits, Tesla's eligibility for EV tax credits could potentially reopen. Speaking of possible changes, Congress has been working on passing an infrastructure bill which included some significant changes to EV tax credits. Some of those changes include increases to the max tax credit up to $12,500 if the automaker makes the EV in the US using a union workforce and if the EV battery is US made. Next are the income limitations, which would decrease to $250,000 for single filers and $500,000 for joint filers. It's important to note that if any EV tax credit changes are passed, they likely won't be retroactive. So if you bought an EV this year and new legislation is passed, you technically would not qualify for any credit increase because new legislation would only apply to EVs purchased after the law has changed. Now, let's say you did buy an electric vehicle before the end of the year. What does this mean? It means if you purchase a qualifying plug-in electric vehicle from the IRS's list of qualifying EVs, which you can see here, you would be able to apply up to $7,500 in EV tax credits. To do this, you would need to fill out IRS Form 8936 and include it with your individual tax return when you file your taxes. This form asks for information related to your EV, such as the make, model, year, as well as the personal or business use of the vehicle. Once this form is completed, the final credit amount will be computed on the last line of the form. And let's say you qualify for the full $7,500 EV tax credit. Well, credits work much differently from deductions. With a tax credit, you are able to subtract the taxes you owe dollar for dollar. For example, if you owe $10,000 in federal taxes and applied a $7,500 EV tax credit, you would only owe $2,500 in taxes. Unfortunately, though, with how EV tax credits are currently set up, the credit is non-refundable, meaning all it does is reduce the taxes you owe, but the IRS does not write you a check for $7,500. If the proposed EV tax credit changes pass, it would allow the credit to be refundable. So if you owed $5,000 in taxes before applying the credit, you would actually receive a $2,500 tax refund after the credit is applied. All right, I hope you found this video helpful. Please be sure to let me know your thoughts or questions in the comments, and I'll see you in another video.